Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden in plain sight within company filings. Today we are diving into an amended report for the StepStone Private Credit Fund LLC. It seems like they found a little oopsie in their last report and are setting the record straight. So what is StepStone Private Credit Fund LLC, you ask? Well, think of them as a company that invests in private credit. Basically, they loan money to other companies that are not publicly traded. This form is an amendment, so they are fixing a mistake, not announcing something brand new. Alright, let's get to the heart of it. The original report had a little hiccup. Imagine you thought you made a certain amount of money on something, but then realized you miscalculated. That is precisely what happened here. Specifically, they messed up the net investment income. It's like the profit they made from their lending activities. Per share for the 3 months that ended on the 30th of June 2025. The original report said it was $0.67 per S-hair. That number was actually the amount of money they paid out as a distribution to their investors, the shareholders, for that same period. Sort of like confusing profit with how much cash you handed out. The correct profit per share for that quarter was actually $0.63. It might seem like a small difference, but when you are dealing with millions of shares, this kind of correction is important for transparency for investors. Now let's look at how much they actually sold. As of July Mouse T, the company sold over Edam Wuyingli Align unregistered shares. Unregistered means they were not sold on a public stock exchange. They did this through something called subscription agreements for a total of about 10 yuan Zhoudian Yingli Align. This offering is what they call a continuous private offering. This is a way for them to keep selling shares over time to investors who meet certain requirements, and they are doing this by relying on exemptions from the usual registration process. They believe this is allowed under specific rules like Section C of the Securities Act. Let's talk about their net asset value. This is basically the total value of everything the company owns minus what it owes. As of the 30th of June 2025, the value of each share was $25.98. On a bigger scale, the company's total net asset value was around $1.25 billion. They had about $2.1 billion in their investment portfolio, meaning that is the market value of all the loans they've made or are holding, and they had about $924 million in debt. So you can see they have a substantial portfolio but also significant debt to manage. And here is the corrected number we mentioned earlier for the 3 months ending the 30th of June, the net investment income. Per share was $0.63. This is important because it shows the actual operational profitability of the fund from its lending activities. The fact that they are correcting this shows a commitment to accurate reporting, which is crucial for investor confidence. Looking ahead, the company is really pushing this private offering. They aim to sell up to $10 billion worth of shares in this ongoing private sale. So far, they've issued almost 48 million shares in this offering, bringing in a total of about $1.25 billion. This clearly indicates a strategy of growth through attracting significant investment from private sources. They plan to keep selling shares every month, which means they are actively looking for more capital to deploy into their private credit investments. This also doesn't include shares bought back or those from their dividend reinvestment plan if they have one. And finally, the filing includes an exhibit, which is the interactive data file for the cover page. This is standard procedure for electronic filings. Now, looking at StepStone Private Credit Fund LLC from a bird's eye view, this amended filing highlights a key lesson in the world of finance accuracy matters. The correction from $0.67 to $0.63 in net investment income per S-hair is a small percentage shift, but it underscores the importance of rigorous checks in financial reporting. The company is actively growing its capital base through a substantial private offering, demonstrating a clear strategy to expand its reach in the private credit market. Their significant investment portfolio and the debt they carry indicate a business model that requires careful management of risk and return. The market for private credit is dynamic, and their ability to consistently raise capital and deploy it effectively will be key to their success. While the correction itself is minor, the transparency it represents builds trust not just for current investors, but for potential future ones as well. Alright, that is our breakdown of StepStone Private Credit Fund LLC's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.